Hello folks, good morning. Welcome to the quarter one result update series at GSN Invest. In this episode, we'll be looking at two small finance banks, Jana and Ujjivan, who in our view are amongst the more reasonably priced, better performing companies in the small finance bank universe. So we'll be trying to cover a more detailed way of covering these companies, which is not just giving you the financials and the numbers that they're reporting, but also directionally trying to analyze what are some of the key themes that are playing out in the small finance space. And as an investor, how should you think about that? And not just look at the numbers that have happened in the last quarter, but if you have to look, say, 3-4 quarters down, a year down, strategically, how are the companies moving as such, right? So we'll start off with the key themes that we are seeing playing out first. And I think amongst the most dominant themes playing out in the small finance space is a move towards secured, right? And this typically happens after every kind of weak end of the cycle that we've seen. So the microfinance space has seen kind of increasing stress over the last few quarters. And naturally, as this happens, small finance banks and banks in general will want to lean more towards the secured side of things, right? So that is one trend that we've seen play out, not just in the banking space, but even in the small finance bank space as well. Just to give you an example, some of the banks that were able to kind of start it a bit earlier, like Jana Small Finance Bank, went from say 40% secured in FY21 to almost 71% secured now, right? So a 30% increase in the secured advances mix in the course of 4 years, and the target is to take this to around 50% odd, right? So that is one kind of consistent theme that we've seen in the SFB space. The second major theme that we've seen is even within the secured space, the focus is more on housing, right? And housing backed loans is one space that a lot of the small finance banks are focusing on, including Jana and Ujjivan. And the reason for that is housing is typically a relatively long term product, right? So, one, it gives you a good sticky relationship with the end client. Second, it allows you enough time, enough opportunities to cross sell other insurance products, other deposit products, term deposit, current account, savings account products, as well as other smaller loans, right? So you could have an add-on sort of two-wheeler loan and other such loans that you can add on to the core loan and kind of pitch those as well, right? So combination of that is driving on the advances side a clear trend towards more secured lending, towards more housing-based lending, right? A consequence of that is obviously on the secured side that the yields that you will get on your advances will be a bit lower, right? And that is one trend that we've seen kind of play out is as the companies kind of move more towards the secure side of things, you will see a gradual compression in the yields on advances and consequently some amount of compression in the NIMs that these entities are earning as well, right? So broadly, top level, two major themes that you need to track. One is how is the secured advances book kind of growing. Second is how are NIMs kind of performing and are they kind of compressing too much as such, right? In terms of growth guidance, the growth guidance for both of these companies, Jana and Ujjivan, has been similar. Planning to grow deposits 20% odd. Advances pretty much in line with deposits at 20%. But within the advances part of the book, because the focus on secured is a lot more, the intent is to grow secured by 35% plus or so, right? And both of those small finance banks have kind of maintained that guide and been able to deliver to a reasonably good extent, right? So top level, these are the kind of key numbers, key themes that you should have in mind. When we come to performance this quarter was a bit shaky, right? And shaky primarily because of the unsecured part of the book. As you would have known, as people who are tracking this space would know, the joint liability group, the JLG's part of MFIs have been extremely badly hit. And in general, MFIs have been kind of seeing stress, right? So we saw this starting, say, September, October or so, when kind of RBI action also started to kind of kick in because there was not only a stress kind of appearing in the market, but multiple entities had also kind of lent to the same set of people, right? So as that kind of unwinds and as kind of growth slows there, NPAs will kind of spike in the MFI area, and we saw that kind of playing out with these businesses as well, right? That being said, despite the spike in the unsecured book, they've been able to keep broad GNPA and net NPA levels in check, right? So for context, for Jana, the numbers were 2.8% GNPA, 0.9% net NPA. Similarly, for Ujjivan, it was at 2.5 and 0.7, right? So reasonably good quality over the asset quality as such. Another important thing to note here is that both of these small finance banks, because they've applied for a universal bank license, and for that you have to keep your net NPA number below 1, right? So a lot of them have been kind of provisioning a bit aggressively. So if you look at the rate at which, say something like a Jana was provisioning 2 years back versus at the rate at which it is provisioning now, you'll see a spike there, and you'll see a spike not only on the unsecured part of the book where it is probably more relevant, but even on the secured part of the book, the provisioning has gone up from say 40% odd to 70% odd, right? So a very sharp spike in provisioning here, and the broad intent there is to keep the net NPA number below 1 as such, right? From a regulatory point of view, that becomes relevant. Advances growth was reasonably strong with uh, Jana at 16%, Ujjivan at around 11% odd. More importantly, the secured book is growing substantially fast, right? So the secured book for Jana grew at 36%, for Ujjivan, off a smaller base, grew at 63%, right? So extremely fast growth in the secured book, which is driving good advances growth, right? So for context, the unsecured part of Jana's book actually contracted this quarter, but because you had such substantial growth in the secured part of the book, broader advances still grew 16% or so, right? So broadly a bit below what was kind of guided, but the way they're kind of guiding it is as you kind of see recoveries happening Q3 and forward, the advances number should kind of grow as such, right? Deposit growth again quite stellar for both. For Jana, it was at 24% odd. Similarly for Ujjivan at around 19%, right? And that again should kind of continue. With Jana, the challenge that they're kind of currently facing is the CASA part of the book isn't growing as fast, right? So that part of the book is growing a bit slower, and was actually flat QOQ this quarter. But the focus now is on the higher net worth segments and pitching the those sorts of products to your high net worth customers, to kind of having a focused product for women customers and stuff like that, so that you can build that book gradually, right? So the way the management is guiding on that is by end of H1, CASA growth should be at 10% odd, and then going into the remainder of the year, they want kind of 20% plus sort of CASA growth, and CASA to primarily drive your deposit growth as such, right? For context, over the last few quarters, CASA growth has been a bit weak, and it is the term deposits that were actually driving growth. The management now plans to kind of reverse that as such, right? Another factor to note is that in a way that will also happen, right? So the rates for the top end of the rates for the term deposits have started to kind of come off quite sharply as the RBI cuts repo rates. So I think between the two banks, it was 50 bips and 65 bips of uh, the top end of the term deposit rates coming down. So that will kind of bring demand down for your term deposits, etc. And your CASA should kind of grow a bit due to that cyclical impact as well. But regardless, both of these have a focus on growing the CASA part of the book, right? And last but not the least, the NIMs are compressing. The NIMs for Jana were at 6.9%. Similarly, for G1, they were at 7.7%. And yields on advances are also coming off a bit. So, over the next few quarters, I think that will be the key trade off for us to track of how much potential NIM compression do you have in businesses like these as the transition is towards secure is kind of increased as such, right? Uh, for context, the transition for Jana has kind of already happened. Jana is already at around 71% secured. Ujjivan is at 45, right? So the scope for potential compression is more for Ujjivan, uh, but that again is a trade-off that we'll have to see, right? So broadly, two reasonably good companies, slightly trickier quarters in Q1, but the way the managements have guided is that This could be close to bottom of the cycle, and starting Q2, even the unsecured part of the book should start seeing some recoveries, and the secured book is anyways kind of doing quite well, so that should help broader growth as such, right? I hope this video added value. If it did, please share it with your friends and other stock market investors as such. Thank you so much.